It was a rude shock to me to see just how empty and robotic life can be when you don't care about what you do, but the only reason you do it is because it pays the bills. Okay, passive income is so important. In this video, I'll be sharing you about why regional Australia is where you will make so much passive income over the next 1, 2, 3, 4 years. In the previous video, I talked about Perth, why 2022 is going to be a big year, 2023 is going to be a big year for Perth. Go check it out. But I just want to really take the time on this video to talk about regional Australia, because people have this predisposition that I don't want to invest in regional, that looking at data shouldn't be further from the truth. Okay, my name's PK and I help people build passive income using data without needing to spend $15,000 on a buyer's agent every single time you invest in a property. Okay, let's get into it. The first thing we're seeing here is Australian population growth over the last 20 years, okay, long-term population growth. And what I want to illustrate here is just the relative contrast of population growth between big capital cities and regional areas. Okay, this is not an exhaustive list, but I know that so many of you who live in Sydney, so many of you live in Brisbane, Melbourne, you have this concept that I only want to invest where I live. I only want to invest in another capital city. Regional areas over the last 30, 40 years have performed just as well. I know it's hard to believe. I've done many videos on this. For example, if you look at Hobart over the last 30 years, capital growth in property prices has exceeded that of Sydney, right? But let's not go into that. I just want to demonstrate population growth, because obviously at a macro level, population growth is something that is very important for continued property price sustained growth. So you can see here percentage growth on the left and different regions on the x-axis. Greater Sydney, which includes Sydney, over the last 20 or so years has grown in population by 30%. Illawarra, not so much. Newcastle and Lake Macquarie, even less. So from that, you could conclude, well, I should always invest in Sydney for capital growth, because probably chances are it will outperform the others. Okay, now let's look at Melbourne. Greater Melbourne has increased at a faster clip than Geelong, Ballarat, Bendigo, and other areas around Victoria. So you might conclude that Melbourne is the only place to invest. Let's look at Brisbane, okay? And I know so many of you that may think Sydney and Melbourne are the big job centers, world cities. They are where we should be trying to invest in property first. This data just doesn't back that statement up. Greater Brisbane has exceeded population growth of both Melbourne and surrounds, Sydney and surrounds over the last 20 years. And check this out, Gold Coast has even beaten Brisbane. The sunny coast has beaten Brisbane. Okay, Toowoomba has been down here. In South Australia, Greater Adelaide, pretty average population growth. Perth, everyone's fearful of Perth. That has exceeded in population growth that of even Sydney. Okay, and you can read the rest yourself. The point I'm trying to make is that there are regional areas outside of Melbourne, Sydney, including other capital cities, but especially regional areas that are well worth parking your money in, and that will increase in capital growth much faster than Sydney or Melbourne. I know this is a kind of like very outrageous comment to make, but the history of capital growth across Australia proves it, and the history of population growth proves it as well. Okay, and the second thing to understand on this chart as well, guys, is that population growth is important from a relative perspective. So you might say, oh look, we get so many more immigrants or whatever the case may be in Sydney than we get in the Gold Coast. That's true, but property prices increase based on incremental or marginal or relative improvements in demand. Okay, so another 100,000 immigrants into the Gold Coast, hypothetically speaking, are way more important to its capital growth in this property market than 1 million in Sydney. Because in Sydney, you're starting at a much bigger base. Does that make sense? It's like if you have a little, teaspoon and you put one drop of water in that teaspoon, that's big for the teaspoon, but one drop of water into a pool is meaningless. Okay, so I just want you to understand that relative demand is what you should be looking for when trying to predict the next capital growth place. That's the first chart. The second chart I want to share with you is Australian proportion of renters. Okay, and people think, regional Australia is so cheap. Maybe not even Bendigo, Ballarat, but even smaller places like Shepparton and Mildura. Like, why on earth would I buy an investment property in these regional areas where it's so cheap anyway? Like, why would anyone want to rent? These other statistics from the Australian Bureau of Statistics, percentage of renter households. So, for example, you can see in Sydney, almost 35% of houses are renters, okay? Illawarra, a little bit less. Newcastle, a little bit the same. Greater Melbourne, almost as much as Sydney. Geelong is a regional place. 25% of all people, you could say, are renting there, okay? Same with Bendigo, Ballarat. Gold Coast is much higher, transient population. Sunny Coast, Toowoomba. This is an exhaustive list of regional Australia. In fact, there are dozens and dozens of regional locations that we're investing in right now. I'm not talking mining towns or super small towns with population less than 50,000, but, meaningful regional centers. But I'm trying to illustrate that there is demand for rental properties. There is demand from tenants for housing in these regional areas. You might think, well, I can buy a regional house for $300,000-$400,000. Why don't they just buy it themselves? There are well-reasoned principles and rational thinking why households choose to rent as opposed to buy, even if it's affordable. I'll get to that in another video. And guys, if you're liking this so far, we're sort of diving deep into the data. May not be everyone's cup of tea, but I really love this stuff. And I think this is really what you need to, like I said before, get out of your day job and get into something you actually love doing through passive income and investment property. The last chart I want to take you through, guys, hit subscribe, turn notification bell on, give it a thumbs up, give it a like, help this video reach more people so I can help them, is just a bit of a table, okay? So long-term population growth over the last, 2 or so dozen years. Gold Coast has beaten, many other locations. These are all regional areas. By and large, population growth is significant long-term. Percentage of renters or proportion of renters is hardly less than 20% or even 30%. So almost 1/3 of all of these properties in regional areas are actually occupied by renters. Don't think you can't find a renter in a regional area. And the compounding annual growth rate for rents is actually great as well. So you might be thinking, oh, that's all good and well, PK, population does grow in regional centers. There are people renting, but I don't know if I'm going to get that rental increase, the same way that I could get it in Sydney or Melbourne or Brisbane. I want my passive income to increase over time, to hedge against interest rate rises, to increase my ability to leave my 9 to 5. Well, check it out. Compounding annual growth rate for these regional areas, it's seldom less than 4 or 5%. I think only Bendigo and Ballarat over the last 20 years have experienced a lower rate than 4%. So, that is, once again, really, really good statistics to show that rental demand is sustainable and increasing over time in Australia in the regional areas. And here's the thing, rental affordability is really strong as well. Rental affordability is super healthy as well. It's not like these renters are having to spend more than 40 or more than 50% of their household income to just afford these rents, which is different to, let's say you're renting a $700 a week apartment in Manly in Sydney, or, you could choose so many examples. In Sydney, Melbourne especially, rents are so high, they really strain those renters because income growth, wage growth hasn't been there. Rents have been increasing. It's taking a big chunk of your salary just to rent a place, which isn't the case in these regional areas. So there is much more upside, okay? So those are the sort of 4 things: population growth, proportion of renters, compound annual rent growth, and affordability. There are so many other reasons why regional Australia has performed incredibly well in terms of the property market and will perform incredibly well. This isn't an exhaustive list of data. We teach much more data than this. check out my 250 videos right here on YouTube. You can learn so much about regional. But the point of this video was, don't be afraid of investing in regional Australia. I have, my clients have, and you can too, make a ton of passive income, capital growth, sustainable, true wealth through property investing by investing in regional Australia. Okay. Well, I'll leave it there, guys. If you did get value, from my channel, from this video, hit subscribe, turn notification bell on, give it a like, give it a thumbs up. That way this algorithm will give this video to more and more people. And I'll leave links below if you want to step up your learning to my free podcast, free Facebook group. Check it out. There's so much discussion, community, and real value to be had. Let's bust these myths, because it's these myths that, oh, look, you only should invest in capital cities to make money in property. It's these myths that really prevent people from leaving their 9 to 5 and, I don't want to be cliched and say achieving their dreams, but just having a bit more flexibility in their life. My name's PK. I wish you all the best. Bye.